We are well into positive territory in today's session. Of course, we have seen quite a lot of down days over the last while. Give us an indication of what is pushing markets higher at this point, because we've got gold currently sitting at 2-month highs. We've got the yen sitting at 15-year highs. We've got a little bit of recovery coming through from the Chinese manufacturing sector. The PMI number still above that 51 level. Give us your take on what's happening on the markets at this point.
Well, Eleni, I'd like to be facetious and say that spring has sprung on the market as well, but we do know that, of course, it's got a lot more to do than just that. I think the big impetus today certainly comes out of the East, and it certainly relates to the improvement in the Australian GDP numbers and also the PMI numbers that came out of China, both indicating that certainly on the Asian front, growth is picking up better than it does on the more developed markets like the US. US and both Europe and the UK are still very sluggish in terms of its recovery, but we keep finding that the performance of the economies out of the Asian region, and in that I include Australia, is looking better and better. This was also confirmed for us in our own trade figures yesterday, where we saw that our exports to the Asian region certainly was stronger than I think many market participants expected, and I think it's on the back of the performance of the Asian markets on an economic basis that we see good performance out of equity markets today.
Well, with some of the commentary that came through after the Chinese PMI number was released is that they're still very cautiously optimistic because there is a lot of concern about demand coming through from the US. Yes, we've also seen a nice pickup in South Africa. We're now above that key 50 level. 50.3 points is what we're sitting at for the PMI number for the month of August. Nerina, we had slightly disappointing GDP numbers here in South Africa for the second quarter, slightly worse than what most had expected. Do you think that perhaps this points to a rate cut in the country?
I think there's a very strong possibility that we will see another 50 basis point rate cut next week by the MBC in South Africa. Certainly our economic data that came out over the last week all indicated that the recovery in South Africa is still very fragile. We did see higher than expected money supply and private credit sector extension figures yesterday, but other than that, certainly the numbers have all indicated that the economy is still in a very fragile state. I think the GDP, yes, disappointing. The numbers that we have seen where there's been some positivity, I think most of that has related more to the World Cup, which we can consider more of a once-off than anything else. And I think it does indicate that not only is there a requirement for a rate cut, but there's certainly also room for a rate cut. So
Nerina,
we would be in the camp that expect a rate cut next week.
Nerina, turning our attention now to the review of the mining charter, we've also had the Minister Susan Shabangu saying that there have been ambiguities when it comes to the Minerals and Petroleum Resources Act. Give us your view on how this is going to play out and how it's going to affect mining companies and, of course, their share prices.
I think the Minister finds herself caught between a rock and a hard place, because there is the existing Act and the law as it stands, and the comment that she made at the conference in Australia this morning really relates to the fact that the mining rights that have been awarded in the case of ICT and Geisha really says that they've acted within the law, and those rights that have been awarded are lawful and therefore has to stand. What unfortunately she's also saying is that as the Act stands at the moment, there are ambiguities in it, meaning that what they did not consider is that there are in some instances existing mineral activities taking place, and they have now awarded additional rights or rights over areas where certain activities are already taking place. I think a good way to look at that is in the case of the mining of platinum group metals. How do you actually prohibit a company from mining only platinum and not the byproduct of mining that platinum? It's physically not possible to do that, and that is the sort of ambiguities that she's referring to. So as a result, she said that the awarding of those rights will hold for the time being, but she's also placed a 6-month probation on the issuing of any additional licenses whilst the Act is being reviewed. If there is a resolution reached in terms of a revision of the Act, that 6-month probation period will be lifted sooner, but we expect that to happen sometime within the next couple of months, and that will certainly also then play out in terms of the court case that Kumba has got hanging in terms of the rights that have been awarded over Sishen mining rights.
Nerina, staying within the resource space, AngloPlatinum, one of the best performers on the top 40 in today's session, in fact up around 3.5%, and we know that they're going to be embarking on fuel cell developments, quite an extensive project which involves government. Do you think this is the way to go for the platinum industry in South Africa?
Well, I think it's a wonderful story that they announced this morning. I think this is exactly in line with government's stated intention of improving beneficiation within our resources space in South Africa. Also wonderful, of course, to see this being announced on a day like the 1st of September. The announcement today is a collaboration or a joint venture between AngloPlatinum, government itself through the Department of Minerals and Energy, and a company called Altergy. Essentially the establishment of a company that will be involved in the provision of fuel cell technology, specifically for fuel cells to be, currently they're basically used mostly in the telecommunications industry, but in the provision of clean energy. And I think we should all celebrate that sort of advancement that is being made, and I think it's great to see that the market acknowledges AngloPlat for that. They certainly have been the worst performing top 40 share over the last quarter, and today they are getting that vote of approval from the market.
A couple of results out in today's session as well. A Metropolitan first half core headline earnings increasing by 11%, and we also heard an announcement of a dividend per share increasing to 42 cents. Good news for investors.
Yes, a solid set of results from Metropolitan. Interesting for us to notice that from the new business side, the volumes were lower than expected, but the margins and the growth in the volume actually, sorry, not the volume, the margin and the size of that business actually grew ahead of expectations, and that was due to two reasons. The one being that they actually grew faster than expected in the higher risk part of the business, but at the same time they also managed to contain costs, and I think that's a very good indication for it. They're currently trading at about 17% discount to their embedded value, and we believe that there's good upside in the share price for Metropolitan, so we like the results that they published today.
What about Afgri? Just touching on those very briefly. Increase in full year headline earnings per share, a gain of 6%. A company that has, of course, faced a lot of headwinds because of the recession and low demand, but things are turning around quite extensively, especially from a maize price perspective.
Yes, this is certainly an area that I think for the long term one needs and wants to be exposed to. Of course, with the recent natural disasters that we had, particularly in Russia, with the heat waves and the fires that we had there, significant upward pressure on maize and grain prices. And this is exactly the space in which Afgri would be operating. So I think from a fundamental point of view, good demand for Afgri. It's a company that certainly has had its fair share of problems over the years. And I think if they can make use of a good use of the current positive environmental and positive factors for them, I think it certainly will stand them in good stead.
Nerina, let's touch on the JSE All Share. We've been basically range bound for some time now, and we have seen some volatility coming to the fore, but we're still stuck in a trading range. Do you think that is going to continue for the most part of 2010?
Eleni, I think we've got very contrasting forces at play here. I've had a look, and really over the last year we've been stuck in this 10% range of between 26 and 29,000 on the all share index, except for a brief period in April when we traded just above the 29,000 level. I think the problem that we have here is that we've had very strong inflows from foreign investors, which have really resulted in the strong currency that we've had. Now, strong currency, typically speaking, is not very good for our stock market, because of its very high proportion of foreign-based earnings or hard currency-based earnings. So on the one hand, you have inflows into our equity markets and into our bond market where investors are really looking for the higher yields that the South African investments offer, but at the same time that then results in a stronger currency, which is negative for the stock market again. And I think over and above all the other factors that have been contrasting, positive and negative, this has really resulted in some of this range-bound nature that we've seen. I don't see any of that really changing in the short to medium term, for the simple reason that the economy is still very fragile, but we are seeing some improvements in corporate results. So I do believe that we're probably going to be stuck in this sort of range for the foreseeable future.